All right, so this is the market review or the weekly review for the week of the last week of April to May 3rd week. So April 29th through May 3rd. So this is kind of a no man's week. I've noticed that this week typically doesn't happen much because it's not technically a first week of a beginning of the month. This is overlap of 2 months. Nonetheless, we had heavy news this week. We had so let's go through the steps here. Market profile, we were in a sell program, right? In a weekly basis, we were in a sell program. We know that. And weekly profile, we had relevant news. We had lots of heavy news. Actually, ICT talked about it on its live streams. So we had heavy news followed by a FOMC press release on Wednesday. We also had some heavy news on Thursday and Friday as well. So overall, a very heavy news week. But nonetheless, I was able to take one trade based on my understanding of how the weekly profile should unfold. Now, we did have a SMT, relevant SMT. We do get an SMT on a 4-hour or 1-hour chart on a weekly basis, and I will show you that SMT that played out on Thursday. And then obviously seasonality, April and May is bearish week. We typically get a little bit of push up in May, followed by another market structure shift and making the lower lows to the middle of May. So I would season X that and see how that goes. So anyway, so let's go to the news and then I'll do the H4 POI and target the POI and how did I take this trade. So I'll talk about the trades that I took first, followed by this H4 POI, because this H4 POI didn't really happen until Thursday, which ended up being a Thursday reversal. So consolidation maybe that's questionable, but followed by a Thursday reversal. So we talked about the news. We were going to talk about the SMT. We talked about the seasonalities, and then let's talk about that trade. So going into this, so this was the previous week, right? We were inside week. We were aiming after this week closed. This week, the April 29th week, we would be expecting these high and low to be taken and ultimately start gunning for these highs and lows from the previous week, right? So once this week opened up, April 29th week opened up, we started crashing right away. So this was the previous week's high, right? And then we took that previous week high, we shifted market structure on Tuesday, right? So this was the shift in market structure I was anticipating right here. And nonetheless, we do get that. And then we also get a shift in market structure here. So market structure shift here, anything up into this area, which is a discounted area, I would be looking to short it to get these previous week's low, right? So this was the inside week. We'll be targeting this previous week's low. So let's see what happened. This is the trade that I ended up taking here on Wednesday, May 1st. I took a options trade that ended up net yielding me about 30% or so. I did not hold on to the trade for many reasons. One of the reasons was that it was a heavy news week. I did not want to wait till to reach the previous week's low right here, and because of the heavy news week, and this was a FOMC manipulation here. So let me show you the trade. I actually didn't take a picture of the options trade, but the way I took this trade was we had a 4-hour shift in market structure. We have FOMC press conference coming into this area of premium array. So I went on to 1-hour chart, and this is what I saw. FOMC 1430 comes out, right? If you look at a 1430 FOMC press release right here, comes in, goes to this area of interest there. So what I did was I went into 1-hour chart and I started monitoring this level on a 5-minute basis. So if you look at it on a 5-minute chart, one of the mistakes that I made this week taking this trade was the fact that I started entering somewhere around this candle here, anticipating a break in market structure, right? So I entered that trade too early. What I should have done is waited until we had a shift in a change in state of delivery here. This open of this candle was violated by this candle at 1525, followed by a huge movement down. So once I entered here, I took profit somewhere around here, which ended up being a close to 35 to 40%, I believe, profit on SPY put option. So the way I played with it was the fact that we went into a 4-hour and we started consolidating. from an expansion to consolidation, right? We can have another expansion up, or we can have a consolidation to a turtle soup and then a reversal. So that's what I was anticipating, since we were consolidating and we make a false move higher and then followed by a reversal or retracement. So I took profit here because this was into that area of discount area here. So if it was, this thing was to continue to shoot higher, this would be a good area of profit taking, because from here market can easily shoot up. So that's the trade that I took. Now let's look at the H4 POI. So I was wrong in my analysis, in the sense that we had a shift in market structure here. So breaking down into here, this would have been the POI going into the week, which I had partly right, but we never got that expansion below the weekly lows here. Okay, so what are the telltale signs that the market is not willing to go down, right? Once we have this push movement here, we started consolidating, right? We did not have any market structure break going into the New York session or going into London session on Thursday. If we were going to be running for these lows here, right, from the previous 2 weeks, we should not see price consolidate here after taking out this premium array, right? We should be seeing a market dwindling down toward these objectives here, but instead we started moving up. So this consolidation here on Wednesday going into Thursday was fact number one, that we might not be going down this low. Okay, the second fact came early in the week, where Monday took the high of the previous week, right? Monday took this high, and look how we ran this high. See, very, very, very lethargic run above this high. It's the same thing for a NASDAQ as well. Same thing for NASDAQ, is that the run above these previous week high was very lethargic. We want to see a quick movement up and down. That would have been a better key in telling me that we should be pushing down. So fact number one is that we did not have a real good turtle soup. Fact number two is that on Thursday, if Monday was truly a high of the week, right, a Thursday we should not be consolidating, right? We should be dwindling down. Friday, once we take out this low, we could have a TGIF Friday back into the range. But we started dwindling down and started consolidating on Thursday. Now this is where the H4 POI started coming down. So on Wednesday we made this low, right? On Thursday, market took out this low again, right? So once the market starts taking out this low, right, in NQ as well, took out the low, but in YM it failed to take out that low here, right? So in YM it failed to take out that low. That was the SMT on a higher time frame chart, on a weekly basis. We have an SMT, and then Thursday we close back into that range. And look at this closure here, very, very decisive candle. We have a change in market structure here, right? A swing high that was violated, right? And then we had a change in market structure there. With, I would say, these candles, because this was a FOMC week. So change in market structure with this candle on Thursday, or going into Thursday, right? And then we have continuation movement up. So we could have played this on Friday as a continuation pattern, and I would be looking for trades somewhere around here. I'm a morning session AM trader, so I would be looking for some type of movement here prior to 9 o'clock. So Friday we also had an 8 o'clock news, right? 8:30 news. What can news do, right? If we're going to be moving up Friday, if it's going to be a continuation, right, from between 8 to the AM range, 8 AM to about 8 AM to 10:30 AM, we should either so during the AM session between 8:30 to 8 o'clock to 10:30, I would say, look at the MMXM model here. So market can only do two things. Market can either come into an area of discount, right? Area of discount in the form of PD array, right? Or it can come to and do a turtle soup and go up. So at 8:30, if you look at this on Friday, 8:30 news, what do? We ran the lows. This is a low right below. We ran the lows and took off, right? So we also came into this area of, I think Nasdaq was a little bit cleaner. So we 8:30, 8:15, we ran the lows here, came into an area of fair value gap, into a PD array, and then took off. Right. So Friday was that 8:30 news. I did not play this, and because going into the week, my bias was a bearish week. And this movement up, ICT talked about it as coming into this weekly order block here, or weekly fair value gap here. So we could see a push toward the weekly fair value gap. Now we don't have that on ES. We don't have that weekly fair value gap, but we can come up to this previous week's high as our target. But nonetheless, just to recap everything, market, we're in a sell program here and on a weekly basis. So high time frame bias is bearish. We got our intermediate time frame, a sell here, because it lined up, our intermediate time frame lined up with our long-term perspective, and our short-term perspective was on 5-minute chart that also happened to line up on the FOMC day. That's why I took that trade. Now anything outside of that, does not line up with our long-term perspective. So long-term perspective being bearish, these movement upwards into these 1-hour and 4-hour charts, these movement upwards does not come in line with our long-term perspective. So with that, I want to end this video.